SARS Commissioner Edward Kieswetter, and a special welcome to the South African Reserve Bank Governor, Mr. Khanyago. We are also joined by Acting Deputy General of Treasury, Mr. Momanyat. So welcome to the platform. And our very own Mr. Johnston. Members of the media, my fellow South Africans, and to all of you that are joining us on a virtual platform, and all protocol observed. I am Charlotte Govender, and I feel privileged to be a member of the inaugural SARS Junior Board, which has been an amazing journey under the stewardship of Commissioner Edward Kieswetter. Today, I will be directing the session together with SARS economist, Ms. Lillian Khumalo. Not forgetting in our room is our very special invited guest, so thank you so much for joining us today. To ensure your health, safety, and comfort during the session, please refer to the pamphlets provided. Should you need any further guidance, you'll be directed by an usher. According to the World Economic Forum, we live in a time of unprecedented change. The interconnectivity of people, businesses, and markets have never been stronger. And as South Africans, the economic challenges we face have become more massive, have created a massive obstacle for economic growth, job creation, as well as reducing poverty and inequality. SARS revenue collection remains the mitigating factor that allows for a stable fiscal framework, which ensures sustainable economic growth and social development in the interest and well-being of all citizens. SARS has provided a strategic vision for a smart, modern SARS that is trusted and admired. For such a solid foundation, we provide clarity and certainty to the tax and customs ecosystems that can build sustainable growth. A solid foundation requires a collective focus commitment and is central to the meeting that needs of today without compromising the needs of the future. It is the bedrock of creating the future we wish to see and bequeathing something greater to generations to come. Ladies and gentlemen, today we set the platform for the prestigious preliminary revenue announcement for the 2022-2023 revenue collection period. Commissioner, I have the pleasure and honor of handing the platform over to you.
Good morning, ladies and gentlemen. Sanibonani nonke, dumelang. We've chosen for the theme building a solid foundation for sustainable revenue growth. We also borrow from the words of Any Given Sunday that the inches we need to win are everywhere, and winning means we go after every inch. Good morning to Acting Director General of the National Treasury, my colleague Mr. Ismail Momanyat, Governor of the Reserve Bank, Mr. Illicit. Always nice to have you share this moment with us, fellow Directors General, Ms. Pindi Baleni, Ms. Avril Williamson, Dr. Busani Aweni, and Mr. Victor Taraj. Members of our own SARS executives, other senior officials of Treasury and Government, SARS colleagues across the country. A special welcome also to our invited guests. We've done something different this year and invited various segments and stakeholders and leaders who actually form an integral part of the work we do. Some reluctantly, others more pleasantly, but in total, I think committed to the well-being of South Africa. Fellow citizens of South Africa, members of the media, thank you for joining us. I have to first share with you an apology from our own Minister, Enoch Odongwana, who is unfortunate to developed some flu and has apologized, otherwise would have been here. He sent me a little emoji this morning with a tear that he's sad that he's not here. Special welcome to many of the stakeholders who join us in person today. We've always recognized that we work with and through stakeholders to improve the entire tax ecosystem. We also recognize the contribution from every single taxpayer. This year, we have therefore invited some of our stakeholders and intermediaries on whom we have a huge reliance to strengthen the system. Industry leaders who drive the economy and create employment, leaders of civil societies and NGOs, senior government leaders who drive various spending programs, they actually spend the money we collect, as well as former and current SARS employees, without whom the results we announce today would not be possible. I want to share with you just some background to the work we do. The SARS mandate is to collect all taxes and customs revenue that is due, to improve taxpayer and trader compliance, and to facilitate legitimate trade. The work of rebuilding SARS, following the damage as reported by Nugent, cannot be underestimated in SARS and in many other important institutions of government. We have come a long way and invested countless hours to date. I want to make it clear, though, that the work will require continued effort, time, money, and will continue long after I ride into the sunset. In 1920, to ensure that we are coalesce around a unifying story, we formulated an inspiring vision to build a smart, modern SARS with unquestionable integrity that can be trusted and admired. We set a clear strategic intent that we would build an administration approach based on voluntary compliance as opposed to enforced compliance. Our strategic intent finds expression in 9 strategic objectives that guides how we give effect to the SARS mandate. In brief, these are to provide clarity and certainty to taxpayers in the fulfillment of their obligations. Secondly, to ensure that it is easy and in many instances seamless to fulfill the obligations. Thirdly, to detect and respond to non-compliance and make it hard and costly, and we do so unapologetically on behalf of honest taxpayers. Fourthly, to enable the first 3, to develop our employees to be high-performing, diverse, agile, engaged, and involved, and to display the highest level of professional integrity. Then to increase and expand the use of data. We live in a world where we cannot do our work without data, artificial intelligence, and augmenting human effort with insights derived from that data. To build modern and streamlined technology systems that enables our work. To demonstrate resource stewardship. It is not our money we work with, and we remind ourselves every day, it is taxpayers' money, and therefore we commit to performance excellence. To demonstrate this resource steward is core. We made it explicit as an objective. And then to work with and through stakeholders to improve the entire tax ecosystem. And lastly, but importantly, to build public confidence and trust in SARS, which we know was eroded in time. The above, therefore, informs how we allocate resources, how we engage with taxpayers and traders based on their compliance behavior, not treating everyone the same, but to the core work we do, even though we remind ourselves every day that our core output, and the one that draws the most attention, is revenue collection. But we remind ourselves that our work is so much more than just revenue collection. The higher purpose, or the why, of our work has a transformative impact on the social fiber and well-being of all South Africans. Tax revenues enable government to promote economic growth and social development that serves the well-being of all South Africans. With the taxes we collect, government provides old age pensions, social relief of distress, child support, and without this, millions of South Africans would be destitute and can build schools, clinics, and provide other public services. We are pleased that we are joined today by important South Africans whose lives are impacted by our work. I would welcome also Ms. Elaine Jones, a pensioner from Easterus, Pretoria, who is in the audience with us. Ms. Leseji Chi, a 2022 matriculant from Moloto, Mpumalanga, and the lady in front who has joined us, a nurse, a retired nurse, who does a lot of social work with us. I'm also pleased to be joined by some of my colleagues among the Directors General, led by DG Baleni from the Presidency, who are at the helm of spending the money and delivering services to our people. Before I turn to the revenue announcement, the main reason for which no doubt you are here today, I wish to provide oversight of how we approach the management of the tax revenue system. We are very clear that whilst the policy instruments and the economy produces an estimate of revenue that we will collect, that it is ultimately two other important things that drive this. Firstly, it is the social compact between the citizen and government, and SARS is part of government. And if that is low, it makes our work harder. And secondly, the administrative capability of SARS. And if that is diminished or depleted, our work becomes harder. It gives me pleasure now to announce the preliminary revenue outcomes for the financial year 2022-23. And these are high-level outcomes against our three mandate objectives of revenue, trade facilitation, and compliance improvement. Under revenue, for the financial year that ended at midnight 31 March 2023, I am pleased to announce that we have collected a net revenue amount of 1.687 trillion. This represents a year-on-year growth of 7.86%, or 123 billion rand more than last year, against a nominal GDP growth. Thank you. Against a nominal GDP growth of around 5.8%. This means that SARS has collected 107.9% of prior year collections, or 99.7% of the challenge set by the Minister a few weeks ago in his February 23 budget statement. This revenue performance translates to a tax to GDP ratio of 25.4% and a tax buoyancy of 1.36%. Tax buoyancy is the correlation between the growth in the economy and the growth in the revenue collection. And if it is above 1, it means that we are more efficient in revenue collection relative to the economy. The gross revenue that we have collected this year of 2.068 trillion represents a year-on-year growth in gross revenue of 9.7%. And this is the first time that SARS has exceeded the 2 trillion collected in gross revenue. Another important milestone. In refunds, we returned to taxpayers an amount of 381 billion, which represents a year-on-year growth in refunds of 18.7%. This is the highest quantum of refunds ever paid out, up 60 billion from the prior year. Just in VAT refunds, the amount of 319 billion represents a growth of 21.5% since prior year. I remain concerned, though, I have to share with you, about the abuse and fraud, especially the attack on our VAT refund system. We are pleased that the 381 billion returned into the hands of taxpayers is good for the economy. In fact, the refunds this year represent about 5% of GDP. It is further pleasing that of this refund, 130 billion and 35 billion has been returned into the hands of medium, small businesses, as well as individual taxpayers. This is good when businesses and individuals remain cash-strapped. Our second mandate objective, which is trade facilitation. For the year under review, SARS Customs facilitated a total of over 7 million trade transactions amounting to 3.937 trillion rand. This represents an 18.4% increase from the prior year. Exports amounted to 2.031 and imports to 1.06 trillion, resulting in a trade balance of 125.83 billion. Of interest is that the current year trade represents a growth of over 51% compared to the pre-COVID 2019-2020 period. Noteworthy, though, is that the trade surplus has contracted from the prior year surplus of 392 trillion. There's too many trillions and billions here. Our program for authorized economic operators, which is designed to facilitate trade by providing a green lane experience to licensed operators, is also important. And this year we have added 13 new and have renewed 31 of current licensees. The total AEO licensees now stand at 159 authorized economic operators. Our third mandate objective, which is compliance, we have begun to measure voluntary compliance as an index. An encouraging trend, albeit slow, is the changing trajectory in the compliance index, which has increased from 62.9% to 63.9% in the current year. The voluntary compliance index developed in 2020 in support of our strategic intent measures the overall compliance behavior of taxpayers across the compliance value chain, meaning registration, filing, and payment. And it shows an improvement. We are engaging in an active and extensive tax register review exercise to ensure that we broaden the tax base and improve compliance, but also clean up the register and deregister those who ought not to be on our register. Included in our compliance mandate is public confidence. It's important, as I said, it is an explicit objective that the public have confidence in SARS. It is therefore noteworthy that public confidence in SARS is improving. From the survey conducted, we measured an increase from 71.8% in 2021-22 to 76.5% in 22-23. The main contributing themes to the increased score were operational efficiency of SARS, tax morality of the public, tax diligence, accessibility, and trustworthiness. Interestingly, public confidence in 2019 measured only 48%. So you can see the huge improvement of 48% to 76.5% in the 4-year period. Both these measures augur well for an improving compliance environment and in support of our strategic intent of voluntary compliance. The tax revenue management system, as I referred to earlier on, we have worked hard over the 4 years to clarify the components of the revenue system so that we can make a distinction between tax that is voluntary paid to SARS and tax that we have to work hard to collect, because that's really the measure of our effort. Although we take pride in the total collection, we focus on compliance revenue because that is how we use the 11.5 or so billion that is allocated to us. And so this system specifically then understands the compliance risk and develops a compliance program that focuses on dealing with those risks, profiling every taxpayer, and selecting the correct taxpayers for further investigation or some compliance treatment. Because inadvertently, if you choose the wrong taxpayers and you let the real culprits get away, you have an inverse effect in the system. And so risk profiling and case selection is very important in the work we do. The set of tax policy instruments is the first aspect, and we work hard with National Treasury, SARS, and the Reserve Bank every year to model an estimate of outcome based on the tax instruments that are available. The second is the level of tax morality and tax compliance within the society, and this is attenuated or reduced when morality and compliance declines, when people lose trust and confidence in government. It makes our work even harder. People feel justified in fiddling with the tax system if they don't have confidence in the system. And so we have to be aware that our contribution, and the contribution of government as a whole, builds public trust instead of eroding it. And then the third, which is the primary focus of our work, our day job, it is to ensure the capability and capacity of SARS is there, equal to the task of administering the laws, both in tax and customs, and to implement its compliance program that results ultimately in revenue that is collected as well as an improvement in the compliance. And this is the main focus of our work. In a perfect world, if these three things work together, revenue will be perfect. We will not have a tax gap. We'll have compliance levels of 100%, and we know that that is not the case. We are experiencing significant shocks that strain economic activities and influence compliance behavior, and the levels of tax and economic crime, sadly, remain unacceptably high and erodes social cohesion and compromises the most vulnerable and poor in society. Given this, tax compliance remains a huge challenge for us. I say for us, not for SARS, because we all are impacted by it. The administrative capacity and capability of SARS therefore become even more essential. For our democracy to work well, and for fiscal integrity of South Africa, we need a well-functioning SARS. The compliance actions administered by SARS focuses on ensuring that the South African public, on the one hand, receives an efficient and effective and professional service from SARS as they seek to fulfill their obligation, but also that we manage the risk to the National Revenue Fund and ensure that the country's fiscal integrity is underpinned. And we are pleased to say that over the last few years, the contribution of SARS has helped strengthen our fiscal framework. I now want to share some of the highlights of the financial year that has just ended, which was delivered under exceptionally challenging economic conditions, all of which continue to impact adversely on economic growth and profitability, and therefore on revenue collections. I want to take you through various lenses that we look at. The first is looking at the tax revenue through the various tax products. The significant contributors to this positive revenue performance reported against the prior year are the following. Personal income taxes have increased by 46.2 billion, or 8.3%, to 601.7 billion in total. Company income taxes have increased by 24.5 billion, or 7.6%, to an amount of 348 billion. Value-added tax have increased by 31.3 billion, 8% increase, to a value of 42.2 billion. And remember, these are net numbers, so if I tell you that VAT refunds have grown by 21%, you can see the gross contribution from VAT, and hopefully the capital expenditure and investment into productive and capital plant, productive equipment, whilst it has a in-year attenuation of revenue, will bring about enduring benefit once that produces profit. But within that, there are also fraudulent activities and other kinds of shenanigans that we must be alive to. Customs duties increased by 15.9 billion, or 27.5%, to 73.9 billion. And excise is down by 1.3 billion, or 0.8%, to 157.5 billion. And I remind you that that was mainly due to the fuel rebate government provided to South Africans during the fuel increases and the additional fuel that people now these days burn to keep the lights on. The second lens through which I want to take you is the lens from various sectors. And I'm going to share with you just the 5 top sector contributors. Finance increased by 50 billion, 9.6% year on year, to 572.4 billion, or 34% of our revenue comes from the finance sector. Community and social services increased by 9.5 billion, or 5.1 billion, to 196 billion, which makes up almost 12% of tax revenue. The wholesale sector decreased by 1.8 billion, or 1.8%, to 102 billion, and make up 6.1% of the tax revenue pie. The manufacturing sector increased by 2.7 billion, or 3.1%, to 91.9 billion, or 5.4% of the revenue pie. Mining, which has benefited in the past from commodity price cycles, we have seen a decrease by 4.6 billion, or almost 12% year on year, to 73.4 billion, and makes up 4.4% of the revenue pie. The third lens is from our segments. We are organized around segments, as I shared earlier. And so from the large business and international segment, revenue contribution is 526 billion, and you can see the muted year-on-year growth of only 1.7%, reflecting a contraction in profitability, but also an investment in plant and equipment, which will yield value in the future. But we are obviously keeping our eye also on the compliance of the segment. This segment represents 32% of our total revenue, and the main sectors, as I mentioned, are finance, manufacturing, and mining, and consist of almost 44,000 active taxpayers. In the small, medium, and micro segment, the revenue contribution from this segment is 373 billion, or just over 11% growth year on year, and 28% of the total contribution. And then traders, we have a contribution this year of 488.6 billion rand, or 15.6% year-on-year growth. This register consists of 379 traders, and this segment makes up 20% of our total revenue. In keeping with our strategic approach, we have continued to deepen our segment focus. The next 2 segments are relatively new and growing. Our high wealth, excluding related entities, in other words, once we focus on high wealthy individuals, we have to be aware that there are also beneficial owners of other entities, and so a composite view needs to be developed. Revenue contribution from this segment is 11 billion, and this begins to lay the foundation to step up our efforts in an important area which at the moment is represented by 58,000 taxpayers, excluding their related entities. And then we come to tax-exempt units, also an area of concern and abuse, and therefore the focus. Revenue contribution from this segment is 14.9 billion and covers over 65,000 entities, public benefit, non-profit, NGOs, etc. And so, again, because of the risk we profile in the segment, we have identified that as a keen and important area of focus. The next, I want to give you a provincial view of contributions. In order to create a better experience for taxpayers and traders, we have organized ourselves in 9 regions across the country, and this therefore also improves our taxpayer engagement, but also creates the ability to improve the overall compliance and the facilitation of legitimate trade. And in addition to the 9, we also have 3 segmented regions. Gauteng remains the highest revenue collection region across all segments, followed by KwaZulu-Natal, the Western Cape, Eastern Cape, and Mpumalanga. I want to now turn to an important focus of our work, which is the compliance revenue program. The revenue initiatives I will share with you here is a subset of the revenue we have announced this morning. But it important is a performance indicator of the ability of SARS to administer its mandate effectively. Our compliance program is what we call this area of work, and our increased focus on compliance actions is yielding pleasing revenue collection results underpinned by a continued improvement to levels of compliance. We call this our compliance dividend. I remain convinced that the most effective and sustainable way to improve fiscal integrity of our country is to ensure that the investment in SARS is adequate. The rebuilding of the tax revenue administration requires appropriate funding, relentless effort, but it will yield the highest return on any investment government makes. The commitment and work of the 12,500 employees at SARS drives our compliance program, and we are proud of the 12,500 employees who collectively have gathered the inches that adds up to the 1.686 trillion. So let me tell you about our compliance program. In the last year, we have had over 21 million engagements with taxpayers through various channels. Included in this are just over 5 million cases of administered compliance actions that has yielded almost 30 billion rand. In other words, the 21 million engagements, some of that are queries, some of that are service related, some of that is just to ensure that taxpayers are appropriately served, but within that 5 million are administered compliance efforts. The total compliance revenue this year represents a 5.4% growth, or an additional 12 billion, and has contributed 13.5% of the total revenue that I've announced. Through the compliance program, the tax register has also grown by 5.4% and has contributed 7.8 billion of the revenue that we've announced. Let me now take you through some of the detail of the compliance program to give you a sense of the work that we do on a day-to-day basis. In debt collection, we have collected an amount of over 77 billion from 1.7 million cases, which means that if we don't follow this up, taxpayers are likely not to pay it, and the longer, the businessmen in the room will tell me, the older debt gets, the least likely you are to collect it. So following it up immediately is an important part of our day job. Outstanding returns, taxpayers who fail to make declarations when they ought to, amounted to 1.5 billion from over 265,000 returns, but that would amount easily to 1 million engagements. A phone call, a letter, an SMS, another follow-up, and then you get the return in. Voluntary disclosure, which is a program you're all aware of, contributed to 3.7 billion from just over 1,500 applications we've received, resulting in a value of 3.5 billion rand, as well as preventing revenue leakage worth almost 400 million rand. Then we also imposed paragraph 19.3. That's when, in our assessment, businesses have underpaid their provisional payments. And just from that effort, we have been able to collect 20.6 billion rand from over 28,000 cases. 8.6 of those cases, 8,600 of those cases within the large and international business segment, and a further 19.8 thousand cases from the SMME, and a keen area of focus is provisional payments from individuals. That also paragraph 19.3 applies. In the area of audits and investigations, 5.4 billion have resulted from concluding 854 cases, and there again, some of the focus areas here was 16 in integrated audits amounting to 1.75 billion, 86 in security industry audits of 842 million, 71 luxury vehicle audits, a very fashionable way to launder money and to mask the true nature of your income. Luxury vehicles, 840 million. 285 pay-as-you-earn ETI audits. Unfortunately, we see an abuse of the ETI scheme, and that amounted to 818 million rand. 13 of the infamous PPE tender audits have produced this year 535 million, and that's a cumulative, that's this year, but remember we also made an announcement last year. We've concluded 4 lifestyle audits that amounted to 232 million, and have conducted audits on 16 religious entities that have provided us with 27 million rand of additional revenue. From the large business segment, the cash contribution has been 6.1 billion by concluding 275 cases. The enforcement interventions are varied and mainly involve exotic transactions, complex business arrangements that results in a permanent loss not only of revenue for the year, but a permanent erosion of the tax base, and therefore a huge area of focus for us. In terms of criminal syndicates, where taxpayers collude in syndicate form to defraud the fiscus, to conduct tax and economic crime, much of which has made the media in recent days. This year, 6.6 billion rand have been derived from 334 investigations. We've also profiled a further 212 cases and are conducting 495 inquiries, all of which, when concluded, should not only yield revenue, but hopefully also bring some of the perpetrators to book. The revenue recovered in assessments is 3.9 billion and another 3.9 billion of cash. We've also instituted 3 preservation orders to the asset value of 1.3 billion, and we have made significant progress in collapsing one very complex tobacco and illicit financial flow scheme, and that work continues. When we turn to customs and excise investigations, the work there from 5,600 interventions have yielded revenue of 13.9 billion rand. Then a huge area of work is using data science, artificial intelligence, and augmenting the work of our auditors with insights from data. Very important that we are able to select cases, as I pointed out to you earlier. And this year, that work has produced 76.3 billion from almost 2 million instances or cases that we've identified. And what that means is that 76.3 billion rand would have been handed back to taxpayers as an impermissible or fraudulent refund. And this data science work allows us to detect and prevent this, and no one has taken us to court on this yet. So it appears that the work is spot on and will be refined and calibrated going forward. We have to strike a fine balance between managing service to taxpayers on the one hand and risk to the national revenue account on the other hand. And we cannot do this without sophisticated data science and artificial intelligence. But we also use this to assess and to create seamless experience through the auto-assessment that many taxpayers have experienced. So we use data science not just to detect, but also to facilitate a seamless engagement with us. I remain concerned, as I said, that refund risk still remains stubbornly high, and we will continue to manage this diligently. Sometimes taxpayers take us to court, and other times we choose to go to court to set legal precedent and to create certainty. And I recently said, I think we should take more taxpayers to court to create more certainty in the system. SARS's approach to litigation is therefore aligned to our strategic intent. Whereas we would like to sit around a table and use the prescriptions in law to find an amicable settlement, sometimes it is not in the interest of the fiscus to settle. And sometimes we can't reach settlements. Often, a judgment is an expression of both strategic objectives. For instance, when a case involves protecting the abuse of the tax system in an area that is unclear, legal precedent and certainty then benefits everyone. The amounts involved in these judgments involve approximately 7.7 billion of tax and customs duty. However, by setting precedent and certainty, the endowment effect, revenue effect, of these actions will yield ongoing revenue results in the future. Then in criminal investigations, mainly fraud related to refunds and under-declarations in VAT and pay-as-you-earn, we've handed 195 such cases to the NPA and have finalized, as we reported a few weeks ago, 97 of these cases where 95 of them were found guilty, and in 10 instances, prison sentences of over 75 years were served. 2 cases were acquittal, leaving us with a conviction rate of almost 98%, which I think speaks volume for the ability of the partnership between SARS and the NPA to convict those who are found guilty. When I turn to specific themes in the reporting here, a huge area of continued concern is base erosion and profit shifting. And this is where companies and individuals are allowed to arrange. So first of all, we acknowledge that companies and individuals are allowed to arrange their affairs to be tax efficient. But when entities do this in form rather than in substance, they erode our tax base. The globalization of business has created a greater need for commercial arrangement between parties, between operations that are located in different jurisdictions. And these commercial arrangements or agreements have grown in complexity with globalization practices that are designed to divert taxable profits to a more beneficial tax jurisdictions, or simply stated, to an area where you pay lower tax or no tax in some instances. The OECD program on base erosion and profit shifting is intended to counter this and seeks to align taxability of a transaction to the economic substance, and also to ensure that taxing rights between various jurisdictions are fair and aligned to economic activity. Alongside this, tax laws were introduced and amended to give effect to substantive economic equity, and South Africa is no exception. Developing countries are often most at risk because they may not have in place the necessary skills, experience and resources, and international reach to effectively challenge base erosion and profit shifting. Large corporates are also able to outspend tax authorities around the world by far. I met with a large corporate a year ago and I said, your tax department costs you more money than the whole of SARS costs us. That's the amount of resources people often are able to direct to the management of their tax affairs, and we often are like David in the story of David and Goliath. I say we often feel like we're going to a gunfight with a nail clipper. You can laugh, it's fine. Important is that we, as SARS, develop the capacity to apply transfer pricing audits. And that was interrupted when, several years ago, the Large Business Centre was dismantled and the transfer pricing audit teams were dispersed. And we are now slowly building this skill again so that we are able to step up to the size of the task. For the time, SARS's ability to tackle transfer and base erosion was almost neutralized, and we are slowly climbing a tall mountain, recognizing it is complex and a significant amount of work. Other significant themes that are of concern and require our focus is the abuse of the employment tax incentive schemes, companies not ring-fencing their assessed losses in line with legislation, second-hand gold businesses' abuse of the VAT system. We've heard again recently the release into the public domain of how these businesses are used to launder money and to often finance terrorism and other illegal and illicit activities, stock write-offs and impairments, and mining capital investments. In syndicated tax and customs crimes, SARS has established dedicated capacity. As I said, sometimes individual taxpayers, they seek to fiddle, and there we have the criminal investigative capacity. But this capacity is created when taxpayers collude in concert and create a network or a syndicate of crime activities to defraud the fiscus. And not just defraud the fiscus, to also erode economic activity, because these things are generally not captured through the formal banking system, or if it's captured through the formal banking system, it is masked, and invariably the entire economic fiber of a country suffers. Areas of focus for this capacity is second-hand illicit gold, illicit tobacco, the illicit fuel industry. You cannot believe what people get up to in the fuel industry. And of particular interest is the flow of funds from and between these industries and entities. Based on the investigation results, we have reason to believe that these illicit financial flows involve tax evasion and money laundering activities. And as I said, often to further fund criminal activities. The money laundering concerns cash that is generated from various activities, including the sale of second-hand gold, fuel, and the illicit sale of cigarettes and tobacco. And then the cash produced from these activities introduced into the banking system, or so-called cleaned or laundered. Various bank accounts in foreign and local currency are opened with the assistance of corrupt bank officials and by procuring the assistance of individuals used as fronts. And even people in government, including organizations such as SARS, can be co-opted and incentivized to form part of this. So a huge focus on the integrity of our own staff. And we are clear that if you are caught, not only will you be dismissed, but you'll have to face criminal sanction in this regard. And of course, these activities are conducted to avoid detection. And so they are complex, as I said, often better resourced than us. No or insufficient taxes are then paid on the income generated from these illegal activities. And South Africa, sadly, has become also an area that attracts such phenomena, because these transactions then are not formally accounted for, not formally recorded, and creates various stages of value erosion and embeds these criminal syndicates in the system. At certain stages of the value chain, VAT is not levied on supplies, as a key example. As part of these activities, certain funds are illegally externalized to foreign jurisdictions by means of ghost imports or exports, where there is no substantive or material goods that flows across virtual or physical borders. Fictitious invoices are created and paid to foreign companies where no trade has ever been delivered or never taken place, or no good or service have ever been delivered, yet it is reflected in fictitious invoices. In fact, there's a very, very well thriving business called invoice manufacturing. Fictitious customs declarations or documentations are generated to facilitate these transactions. Our efforts over the past 3 years, whilst it's just beginning to tip this huge scale of activities, we have completed 8,000 illicit trade interventions that resulted in seizures of 2.5 billion. But as I said, it touches the tip of the iceberg. Through this work, we've raised assessments to the value of 57.8 billion, and we have collected already 16.6 billion and preserved over 13 billion rands of assets, handed over 110 cases to the NPIA, and have secured 1 conviction so far. Specifically, state capture-related matters, we have 29 audit cases that have been completed with an assessment value of 504.1 million. And so you can see, slowly but surely, the dial is shifting, but it's a huge mountain to climb. We have what is called common reporting standards. These are information exchange frameworks between various jurisdictions, and SARS uses this through an automatic exchange of information protocol or information exchange on request to obtain information from other tax jurisdictions, match it against taxpayers who have financial assets offshore to make sure they are appropriately declared, and I'm sure the governor would say appropriately declared also as foreign exchange transactions from the Reserve Bank. And there, where we detect mismatches, we then create a case and follow it up. In the high wealth individual segment, we have completed 65 cases, identified 65 cases that are currently under in-depth investigation. Within this, we've identified 26 taxpayers, which is 40% of the population that we've tested, and we see the values of these anomalies could not be matched with what taxpayers have declared and have so far identified almost $500 million in this regard. In addition, 18 taxpayer cases, or 28% of the population tested, have amounted to $105 million, and 15 further cases are currently under investigation. Some of these cases, we've issued letters of findings, we engage with taxpayers, they give us the runaround, and so again, this work takes time, it is complex, but already has amounted to almost 80 million rand. Emanating from the common reporting standards, 13 of those taxpayers who were identified came forward to make use of the VDP process. We finalized 9 of such cases that have yielded 30 million rand that I've announced earlier in the total VDP. In 4 of these 13 cases, SARS has applied international tax evasion and 3 gross negligence penalty sanctions. This shows that we will not hesitate to impose the highest penalty that is permitted, that is aligned to the taxpayer non-compliance behavior that we detect. Our litigation also covers a broad range of cases where we see an increase in procedural challenges. People who know that they cannot win the case on substantive grounds, they would challenge the procedure and cry wolf. In issues of substance, we range anything from tariff determination on trade items to, as I said, complex transfer and base erosion type offenses. And this is reflected in the lack of transfer cases that have taken place. As I said, for some time this area received little attention. The Crooks Brothers case, for example, that was reported in May 2018 was a rare first in a transfer pricing case that we took to court, and we need to step up these efforts because only a renewed effort in tackling these events, in focusing on cross-border arrangements between connected companies that are explicitly designed to conceal the commercial substance and purely for the purpose of avoiding tax is identified. And we've also seen the courts rule in our favor in a number of instances. We will in all likelihood see more of these cases come to court. The first indication that SARS had refocused its effort ought to have been clear from the tax court decision in the case number 14305, which was handed down in January 2021. This judgment importantly sets out the factual background, but importantly the tone, that whatever methodology was used to determine the arm's length price, the ultimate objective was to ensure tax was paid on the proper amount of income. So when we are able to drill through all of the arrangements to understand the true substantive tax obligation, that is really what these cases help us identify. Of course, we have to gear up, as we already have begun, our litigation initiatives to focus on transfer pricing and base erosion practices. The full acceptance of these cases are often vigorously opposed and expensive and packed with expert witnesses. They take long, they take money, but it is important that we are unrelenting in this regard. Because of the season we are in, I'd like to just share with you some of the observations of load shedding. Understandably, load shedding, but also affects our revenue collection daily due to loss of sales and profits. VAT is the tax that would immediately respond to load shedding as sales come under pressure. Company taxes are also impacted by load shedding. The data from the CSIR indicate that through load shedding, we have lost 3,773 hours of production in the calendar year 2022, and it is the highest loss in the last 5 years. It also says that the energy that we have shed amounts to 11,529 gigawatt hours, and considering the demand side response, the energy shed that reduces to 8,301 gigawatt hours. Together, these factors suggest that the loss to the tax system is estimated at 60 billion. We are obviously refining our understanding of the full impact and the timing, as some of these may only manifest over a period. For example, value-added tax in some instances are delayed. Corporate income tax may spill over more than one financial year. SARS expect that the impact of load shedding will reflect in corporate income taxes collections, particularly during the first half of the current financial year. There's a positive side to this, and I want to talk about renewable energy. Load shedding naturally presents a huge risk to the fiscus, but we've also noted the emergence of renewables as a new subsector. In the Western Cape, for instance, we have noted a number of wind energy-linked entities that have moved from being in a refund position over the past 25 years and are now paying VAT because they are actually producing electricity and generating income. In particular, for the reporting financial year 2022-23, collections from wind farms in Cape across all tax types increased by 26.6% and have contributed 2.7 billion to the fiscus. Furthermore, we've also seen a drastic increase in the importation of solar panels. The top 10 importers experienced growth of import value of 73% year on year, totaling a value of 3.8 billion rand in 2022. Static converters, the top 10 importers, grew by 609% year on year, totaling 5.1 billion in value. And lithium-ion batteries, the top 10 importers, experienced an import value of 7.8 billion, or a 240% year-on-year increase. So we can see that in the midst of the dark cloud or the darkness of load shedding, a new industry is emerging, which augurs well for the future as we also try and make the transition towards a renewable energy sector. All of this points to an opportunity that the renewable subsector presents. We are therefore also focusing our research and to develop insight to understand this emerging subsector and also ensure maximum compliance from the outset. I'd like to, as I draw to the close, tell you about the tax of the future. We call that Tax 3.0. The OECD does that, OECD countries. In line with our vision to build a smart, modern SARS and our strategic intent of voluntary compliance, the aim is to build a taxpayer engagement model where for most taxpayers, tax just happens. We want it to be a seamless event. Send you a thank you note once a year that your obligations have been fulfilled. We've gone a long way for that with about 3 million taxpayers who already do not have to file a return. Using only third-party data and AI, we produce the assessment outcome, which if taxpayers experience it, they'll receive their refund and the assessment instantaneously. The ultimate expression of our strategic objective number 2, to make the fulfillment of tax obligations seamless, has already begun. This means that a fundamental shift in our approach going forward. So you will remember historically that tax administration has relied on retrospective declarations by taxpayers, followed by a manual assessment of tax liability by SARS. And if required, some verification and or investigative work may be triggered. This subsequent work would then often imply requests for additional information, additional from the taxpayer or other sources, as well as further engagement with the taxpayer, and therefore work for us and burden for the taxpayer. Today, taxpayers already have seen a shift, where increasingly the reliance is shifting from declarations by taxpayers being the norm to that becoming the exception, and the norm increasingly being reliance on the information from third-party domestic and international data sources, as well as demographic, asset, and transactional registers. Examples of these may include financial institutions who provide us with data, retirement funds, medical insurance, as well as the population register, the deeds register, the national motor vehicle register, and various stock exchanges. But the final liability will still only be assessed retrospectively. That's where we are at the moment. We call that tax 2.0. The future of tax, or tax 3.0, has the audacious ambition to move largely to real-time liability as opposed to retrospective liability assessment that require taxpayer declaration only as the irreducible exception and almost entirely rely on data from third party as well as publicly available data. People like to talk about their newfound wealth, and we pick that up in the public media, but also from structured third-party reliable data sources. The rapid advance in data science and artificial intelligence and connected devices, the so-called Internet of Things, will accelerate this development. And when we say it's tax of the future, the journey towards that has already begun. And when this ambition is realized, tax would effectively have become a non-event. Another emerging reality that tax and customs administrators are coming to grips with is the changing world of work and the digitalization of economies. Economic activities are increasingly being dematerialized, and whereas in the past taxing rights were determined by physical presence and effective management and control, increasingly it has to shift towards economic presence, where the economic activity and the benefit is derived. The concept of business hours is fast being replaced by an always-on world, where customers and businesses engage around the clock, 365 days a year. And the metaverse reality may be an intimidating notion for most of us oldies in the room. I can tell you the next generation is already becoming used to living vicariously through their avatars, their devices, and are unconstrained by place, environmental conditions, material or physical qualities. I would like, therefore, to conclude to appreciate over 60 million citizens who, through their consumption, contribute to our VAT. We often say we only have 26 million taxpayers, but every South African who buys a good or a service pays VAT. To the 26 million registered individuals and trusts, the 4 million companies, 1 million VAT vendors, the 640,000 employers, the 370,000 traders, including AEOs, as well as the 12,500 hard-working employees of SARS. Working with and through many of the intermediaries have helped us to achieve the results we shared with you today, including registered clearing agents, registered controlling bodies for tax practitioners, and associated industry bodies. We are fortunate to have the unending support from stakeholders across local, continental, and international fiscal ecosystem. The important work we perform is the intersection of economic performance, which SARS can do very little to influence, but the effective and efficient work of tax administration ensures that the economy is reflected in the revenue that is collected. Through all of this, we do every task correctly and consistently to produce these results. In closing, I'd like to extend my gratitude to several people and stakeholders for their input. I want to thank the South African President, Mr. Matamela Cyril Ramaphosa, the Minister of Finance, who unfortunately is ill today, Mr. Enoch Godongwana, for their steadfast support, along with the Acting National Treasury DG, Mr. Ismail Mamoniat, and colleagues at Treasury. I want to thank our stakeholders and related bodies across all sectors and members of the media for reporting the story we shared with you. And finally, again come back to the 12,500 employees who are continually and diligently pursuing the higher purpose orientation that we hold so dear as an expression of their commitment to public administration, which is excellent. To the compliant taxpayers and traders who have made these historical results a reality, on behalf of SARS and the government, I wish to send you my heartfelt message of gratitude. Winning means that we go after every inch, contributing to a solid foundation for sustainable growth. Your tax really do matter. Thank you.
Commissioner, thank you. Thank you for painting the SARS 2022-2023 revenue picture. Well done to SARS. Good afternoon, ladies and gentlemen. My name is Lillian Kumalo. As Charlotte had indicated earlier, I'll be co-directing the session this afternoon. I will be facilitating the media representation question and answer session. So let me start off by just giving guidance as to how we would be proceeding. I'll be taking 5 questions per round. Once these questions are posed, I will hand over to the panel to respond to these questions. There is a mic in the center aisle for those that are actually closest to the aisle to step up to the mic to pose their questions. And then there are 2 roving mics on the side that will be for access for those sitting on the ends. Before posing your question, kindly indicate your name and the media house that you are representing. And lastly, indicate to whom on the panel you'll be posing your question. Lastly, there are some questions that might be coming through the SARS revenue inbox at revenue2023@sars.gov.za. Those questions, if they are there, I will take in the last round and pose over to the panel. We may now proceed with the questions. You may show your hands. Kindly show your hands. Okay, for me to recognize you. 1.
Lillian, if I may just say that some of our guests who may have a comment or question are welcome to ask in addition to the media.
Okay. All right. Okay, we'll take the first question. You can proceed to the mic. Yes, I've recognized you.
Good morning, everyone. My name is Tabiso Manama. I'm an entrepreneur. We run a chemicals manufacturing company, but we have great interest in the whole fourth industrial revolution that is taking place. You spoke about SARS 3.0, and equally in the manufacturing space, there's a lot of things happening around electric vehicles and renewable energy and so on. We'd like to venture into that space, but we realize that in other parts of the world, such as Europe, there's great tax incentives that are incentivizing consumers to transit towards electric vehicles and hydrogen fuel cell powered vehicles and so forth. I would just like to ask SARS, because this is a very important factor. You will know that half of the cars that we manufacture are exported to markets that are evolving towards the space. I just want to understand from SARS, what is some of SARS pipeline plans to make the space conducive for manufacturers and for consumers, because it is currently not on par with the rest of the world currently. Thank you.
Okay. Is there perhaps another hand? Or someone would like to step up to the mic? Okay. All right. So the gentleman did not indicate to whom he's posing the question, but I would think that falls within the policy space. But Commissioner, you are welcome to also respond to that.
I'll give an initial response and then ask the DG to provide. We have begun a conversation between SARS, the Ministry of Trade and Industry, as well as Treasury, with the respective ministers. We are late out of the blocks in terms of that, so the observation is quite correct. And it's something that I speak now as a South African. We have to step up so that we don't lose the opportunity, because companies that have mother companies sitting across the waters already asking what our position is so that they can make investment decisions about batteries, for example, and other equipment. But for the policy position, Momo?
Yeah, no, thank you, and thank you for the question. On the one hand, I get worried when any question is, when is there a tax incentive for this or that? So, do we need a tax incentive to have EVs? That's the first question. But having said that, we, in fact, with the Minister of TTI and Minister of Finance, actually met with some of the auto manufacturers last week. And there is an active engagement taking place to look at how we can also produce electric vehicles, because like you point out, if you take Europe and so on, I think it's 2035 and so on, they're not going to be buying industrial combustion engine cars. So certainly for the future we need to make decisions now, but it's something we're continuing to engage. Whether one needs a tax incentive is a separate discussion within that. Generally we prefer that we tax everyone lower rather than provide incentives to particular sectors. That's just a general kind of approach. Thank you.
Thank you. Okay, I'll take up further questions. Any hands? Yes, sir, you're recognized. Any additional hands? You're recognized. I'm
Just
awaiting
hand
the roving
there
mic.
to Mr. Dippenaar. Here we go.
It's not on.
Hello, there you are. Laurie Dippenaar, retired banker. Mine is a bit of a technical question. In your presentation, Commissioner, you showed the contribution from high net worth individuals as 11 billion. But I also looked at recent tax statistics that you published, and there you showed in the category of taxpayers earning more than 5 million rand per annum, there were only 8,000 of them, roughly. And they, in those tax statistics, I think you show you collect 30 billion plus from them. So there's a discrepancy. Now, one of it can just be that how you classify, say, dividend withholding tax that you showed in your presentation as a category, whereas in the tax statistics you group it with high net worth individuals who receive those dividends. You didn't answer the question now because it probably needs a little bit of delving, but I thought I'd just bat a bit for the high net worth taxpayers.
Noted, Mr. Dippenaar.
Okay.
As I said, the high wealth individual segment is at its infant stage, and we have to make sure that, first of all, what we define as high wealth individual is different. The table that you refer to is purely an income table, not necessarily a full reflection of the true wealth of an individual. Some of that income is simple and straightforward. It's a company CEO that earns salary and other income that is administered by the employer. The true nature of wealth, though, of wealthy individuals is not reflected in their income statement. It's often reflected in their balance sheet, and SARS has traditionally not constructed a full view of such taxpayers. And so we have to acknowledge that the work there is incipient. It's really at the beginning stages, and we need to grow and improve our work there. Thank you.
Thank you, Commissioner. Okay, we can proceed. Any hands? Yes, you are recognized. You can proceed.
Unita Maria, I'm currently CEO of the South African Association of Freight Forwarders. My question is a bit complex, is that the supply chain currently consists out of 12 distinct role players. And when we work in the open economy, you've got the cargo owner, you've got the transporter, you've got the customs broker, freight forwarder, the warehouse, and let's say the last mile, the transporter. And when we look at the way that the tax ecosystem is linked, it always goes back to Section 99 to say that are you jointly liable for either the VAT or the duty that's been missing. But with the complexity of the supply chains where it's developed now, you need to make sure that you segment correctly who's the cargo owner and what is their different role. And we can see now over the last couple of months, there's cases where the easy target is the legitimate clearing agent. So I was just wondering, would you look at it in detail? Can we engage with you, and can we maybe make that more transparent to make sure that we go after the rightful illicit people? And then my second question, if I can come on that, is that do you think that is a case of capacity building that we can address, or is it more in terms of the segmentation of the trader base? Thank you.
Thank you.
Thank you.
Commissioner?
It is more the former than the latter. It's a capacity and capability issue, but also to your invitation, we welcome working together because you understand the value chain more intimately than what we do, because it's a very specific value chain. And you're right, the temptation is always that those who are already compliant receives more focus than those who are not compliant at all. So one of the things we did after I arrived was the largest, I spoke about risk profiling in case selection, and the largest sample of cases that we select, ironically, are from people who have made a declaration, whether it's a customs declaration or a tax declaration. And so they are in our face, and so they get, and often their misdemeanor may be on the margins. What we don't know about are those entities who don't register, let alone submit a declaration. And so expanding through the use of data, our ability to recognize traders who are not registered is an important area of focus, so that at least as a start we get them onto the register. And then secondly, to ensure that they make declarations that are accurate is important. And so we are moving away from a declaration-based risk profiling approach to an entity-based risk profiling approach. It also allows us to see the interconnectedness between whether you are registered for one tax type but ought to be registered. So doing capital reconciliations, looking at what you declare in your income statement compared to that which you declare in your VAT declarations. So increasingly we have to move to an entity risk profiling and also an integrated approach of investigation and auditing. And we have a long way to go as far as that's concerned. But we would love to work with industry to sharpen our own pencils, but also to steal from you people whose time has come to do public service.
Commissioner, do you have a picture of my face?
We know who you are, Yonita.
Okay, so I'll give opportunity for the last question. If there's none from the floor, allow me to probably pose a question to the governor. I know what is keeping us all awake at night, but I would like to know what is keeping him awake at night in view of the discussions that we've had here today.
I sleep. What keeps me awake at night is that thing that steals South African taxpayers' incomes, and it's called inflation. And many people think through it, and they look at this and say that why worry about these things? The point of the matter is that it affects everyone, but importantly, those with fixed income are affected even the most. Their income gets eroded. And it was very important for this country to task one institution with the responsibility to tame that beast called inflation.
Thank you. Commissioner, closing remark from you?
Let me allow closing remarks from the presentation maybe to Johnston, the Chief Revenue Officer, and then Mr. Mamoniat.
Thank you, Commissioner. And I think it becomes very important as we go forward. As of Saturday, we are tasked with collecting 1.788 trillion. Whilst we are celebrating the achievement that the Commissioner spoke about, work is already underway to ensure that as an organization, we are properly placed to achieve that 1.788 trillion. We have already started work, and we have a compliance program, as the Commissioner spoke earlier, which got various areas of focus. So if you are not compliant, we will see you. If you are compliant, we will see you as we move towards achieving the 1.788 trillion. Thank you very much, Program Director.
Thank you. Acting DG?
Governor,
You want to stand here?
Commissioner wants
It's
me
fine.
to come there. No, thank you, and for the opportunity to say something, because I think, as the Commissioner outlined, the Minister was scheduled to come, and unfortunately, as he said, was taken down by flu. Because, and I say this because this function every year, it's a ritual, but it's a very important function. People tend to focus on the budget side, on the spending side. And in fact, what happens in a budget is you already plan to spend the money that's not there yet, but is projected to come. And by the way, to change the expenditure plans after that is really almost impossible. And that's what it is. I mean, the revenue side is very different, and the role that SARS and the 12,500 colleagues have performed, I think, has been outstanding. They've more than collected, so you've got to go back from last year's budget, because that's the year we're talking about, that started in April the 1st last year and just ended last week. They collected over 88 billion rands more than what we budgeted last year. Okay, and that's an amazing feat. And I think certainly has reversed, and I think we should clap hands. And certainly reverse, I think, some of the terrible times that SARS went through state capture, and where this organization was targeted. And yes, there's still a lot to be done, and they've been able to do it at a time when there's a very constrained budget. We certainly can't give SARS as much money as we all think it should get, because it can certainly improve its efficiencies. And let me say that they've been able to collect this even at the time when you have declining growth, load shedding. So certainly the effort made by SARS employees was a big factor, I think, in getting us to where we are. Yes, it may not have gone all the way, because, you know, we keep SARS on their toes. When they perform well, then again in February, well, in October and in February, when we did the budget this year, we put the carrot a bit further, okay? And we expected them to collect even more. Yes, they down 5.5 billion on the revised upward figure. But let me say, they've also had much higher refunds this year. So if you look at the gross figure, I know someone who foolishly boasted he was $1 trillion man, okay? But now there's 2 trillion, okay, that SARS has actually collected. The first wasn't much of an achievement, messed up SARS. This is a real achievement, okay? So I think we do need to clap and just get in perspective, I think, the success that SARS has demonstrated, and hopefully will continue to demonstrate, I think, because they play a really critical role, not just in government, but for the country. And it's still an example that even in these bad times, it's possible to have a good organization like SARS. There's no issues about its integrity. There's no issues of corruption. And we always say, on the revenue side, we can largely account for every cent that's collected by SARS because it comes into the National Revenue Fund. Of course, the difficulty is when we allocate it out for spending, that's where the trouble starts. But certainly, I think on this side, let me just congratulate the Commissioner, I think, for all the hard work and the success, and we hope that they will continue to succeed, because the times that are coming are going to be even tougher. And you've already seen on the revenue numbers with load shedding being taken into account. The governor has been more pessimistic than us when it came to the budget, and now they have revised down, the IMF has revised down. So times are going to be tough with more load shedding. It is having a real impact on businesses, on individuals, on people's lives, and the sooner we can reverse institutions like ESCOM and Transnet, it's a much harder job, okay, much harder, but you know, the NPA and all the institutions that were captured, the sooner will we get not just a better life in a sense, but if you fix up ESCOM, you have the electricity which we all used to take for granted more than 10 years ago, and that itself is a major factor to ensure there's growth and there's more revenue coming in. So, Commissioner, let me thank you on behalf of Treasury. We're really proud of SARS. We think you've done, you know, your team has done an excellent job, and we hope you continue to do that. Thank you.
Okay. Do you perhaps want to respond one last time? Okay. So before I call on Charlotte to do the closing remarks, kindly note that the Commissioner will be having one-on-one sessions with members of the media, those that have actually scheduled an appointment. So they will be facilitated through to the various meeting rooms. As per the schedule, the information with regards to which room has actually been communicated to those representatives that have actually scheduled their sessions. And lastly, the Commissioner has also indicated that the media representatives, if you probably want to have discussion sessions with business representatives of business bodies, you're welcome to do so. I think we will have a facilitation of that process. Over to you, Charlotte. Thank you.
Thank you kindly, Lillian, for handling that session, and to the panel for being under fire and handling it with such grace. Ladies and gentlemen, we have come to the end of our event. To our stakeholders, taxpayers, individuals that are joining us virtually, and to our very special guests, we thank you for gracing our event and celebrating with us the hard work and efforts of each person that contributed to the collection of revenue. Once again, we thank you for joining us, and remember, as South Africans, we can win together. With indomitable will and tenacity, we can create the future we want to see and bequeath something greater for the generations to come. Thank you again for joining us.
Your tax matters.